Did you know that nearly 60% of Americans don't have enough savings to cover a $1,000 emergency? That means one unexpected car repair, medical bill, or home expense could send them into debt. But here's the good news. Setting up an emergency fund the right way can keep you financially secure when life throws you a curveball. And it all starts with choosing the right bank account. Welcome to Factful Finance, where we break down money matters with clarity, confidence, and actionable strategies. Today, we're tackling a crucial question. What kind of bank account should you open for your emergency fund? Let's set the record straight. Your emergency fund isn't just another savings account. It's your financial safety net, designed to be readily accessible in times of crisis, while still offering security and, ideally, a little growth. That means not just any account will do. So let's go step by step and find the best fit for you. First, your emergency fund needs liquidity, meaning you can withdraw money quickly without penalties or delays. That rules out investment accounts like stocks or real estate, which could lose value at the worst possible time. Instead, you'll want an account that allows immediate access, but without the temptation to spend it on non-emergencies. A high-yield savings account is one of the best options. It offers easy access, FDIC insurance up to $250,000 per depositor, and, unlike traditional savings accounts, earns you some interest to combat inflation. As of recently, some of the best high-yield savings accounts are offering annual percentage yields, APYs, over 4%, which is significantly better than the near-zero rates at major brick-and-mortar banks. Online banks tend to offer the highest rates, so consider reputable ones with no monthly fees and strong customer service. Another solid option is a SHA money market account, MMA. These accounts also offer competitive interest rates, but come with check writing privileges and debit card access. While this adds convenience, it might also make it easier to dip into your savings for non-emergencies, so discipline is key. For those who want a little more structure, a certificate of deposit, CD ladder, could be useful, but with a catch. CDs lock in your money for a set period in exchange for higher interest rates. If you go this route, consider a CD ladder strategy, staggering different maturity dates so some funds remain accessible while others grow. However, keep in mind that early withdrawals come with penalties, making this a less flexible choice. Now, let's talk about strategy. Where you store your emergency fund should align with your personal needs. If you're someone who struggles with impulse spending, keeping your emergency fund at a separate bank, one without an everyday checking account, can add a psychological barrier that helps you stick to your savings goals. But if quick access is your priority, a linked high-yield savings account at your primary bank could make more sense. Take Noah, for example. He used to keep his emergency fund in his checking account, but found himself accidentally spending it on impulse buys. Once he switched to an online high-yield savings account, separate from his everyday banking, he not only stopped unnecessary spending, but also earned interest that helped his savings grow. On the other hand, Emma, a freelancer with unpredictable income, needed immediate access to her emergency funds, so she opted for a money market account with a debit card for quick withdrawals. Regardless of which account you choose, the most important step is to start. Experts recommend saving at least 3 to 6 months' worth of essential expenses, more if you have dependents or an unpredictable income. Even if you can only start with $500, that's still better than nothing, and small contributions add up over time. One last thing, this information is for educational purposes only and isn't financial advice tailored to your specific situation. Be sure to do your research and consult a financial professional for guidance that fits your personal needs. So, what's your first step? Are you opening a high-yield savings account, or do you already have an emergency fund strategy in place? Let us know in the comments. And if you found this video helpful, why not hit that subscribe button so you never miss out on practical financial tips? We think you'll find the next video on screen just as useful for reaching your money goals. Thanks for watching Factful Finance. Stay smart, stay prepared, and we'll see you in the next one.